Okay, if you can get your seats, please. Finish your coffee, although I'm sure you cannot bring your coffee inside. Morning, everybody. I am Jose Linares. I'm responsible for the corporate investment bank here at Santander globally. Our next panel is just terrific. My staff gave me a stack of paper on how to introduce them, but they've already been introduced throughout the morning because we've referred to you already many times. So Enrico Letta, former Prime Minister of Italy, he's just written the report. And I understand you're going to be a dean in EA here in Madrid. So that's a great benefit for all the students that go to EA to have you as a dean there. Mayreid, did I pronounce your name?
Perfect.
Perfectly. I've asked 10 people about how do I pronounce it. I got 10 different answers. So I've asked you, I got it.
You got the right answer.
I got it. Anyway, she's told me she's been a journalist for a long time. I'm not. And she's right now, obviously, the Commissioner for Financial Services, Financial Stability, and Capital Markets Union. She's about to finish your term, so this is sort of your farewell tour. We're absolutely honored to have you both. I'm just going to set the scene. The panel is called Investing in Europe, European Growth. But so far, what we've heard is the Silicon Valley of regulations, Brussels. Sorry, Enrico, your name for Capital Markets Union sounds sexy, so that's zero chance for CMU or banking union. I'm just going to add mine. Many of you know that I played with the American jersey for almost 2 decades. And when I came to Europe right before the financial crisis, I used to say this is easier than taking candy from children. I was referring to taking market share from European banks, which is obviously an awful thing to say. So given that that's pretty depressing, I want to rename this panel to Give Us Hope, Please. Enrico, what do we need to change to go to what we all aspire to do?
Now, first of all, I think there's momentum. There's really momentum, and we never had such momentum in the last 15 years after 2008. So we have to catch this opportunity. Second, I think von der Leyen was really on the right track because she decided to put in the roadmaps for the commissioners very clear indications. So today the debate, the institutional debate, has very clear indications. First of all, on the mission to create this savings and investments union. Even the term is there. And it's not because I want the copyright, I don't care about the copyright. I care about the need to change politically the big direction and the big mission of the integration of financial services. If I may say in a very short way, why until now CMU didn't fly? Not because of the way in which it was implemented or the way in which the Commission worked, or I think the day in which Brexit happened, that was the day in which CMU lost his big, I would say, equilibrium. Because the CMU was launched 2 years before Brexit. And it was launched with, I think, one very good idea. And the idea was to have London as capital, financial capital of Europe. It is another collateral damage of Brexit. Today, I think we have to reconsider the integration of financial services, knowing that, and that was the main aim of my report, to say, hey guys, we have the euro. We integrated the most complicated thing, because the euro means that the French renunciated to their currency with the same name of the country. The currency is the most emblematic element of the national sovereignty, and we integrated it. And people are happy in Europe because of the euro today. So now the key point is that we have the euro, but we don't have financial markets. And I try to explain to, not only to experts, they know very well, but I try to explain to a large audience that the fact that we don't have integrated markets is creating a big problem in terms of lack of jobs, in terms of lack of growth, in terms of moving to the US financial market, everything. And we are, I think, suffering because of that. So I think today, changing the direction and saying that we have to move to a savings and investments union, that means integrating financial market for a higher purpose. And the higher purpose is, first of all, how to finance the transition. Otherwise, the transition will be not financed. And without the way to accompany the transition, it will be a backlash, political, social, and economic backlash. This is, in a few terms, the way in which I see today the big mission. And frankly speaking, I'm a little bit optimistic because I didn't see any momentum like the one we are having today. Of course, we have to push, but the word which is present here has a fundamental role, because it's not just a topic for European institutions. It is, first of all, a topic for national governments, not to be an obstacle, because until now, I think you are totally aware and totally protagonist of the fact that you were challenged by national obstacles. And that is totally crazy, because frankly speaking, today we need to integrate. It's the only way to give money to investments and to the real economy.
Commissioner, there are some countries that are beginning to talk about the two-speed Europe in terms of capital markets, right? That sounds to me like further fragmentation as opposed to more integration. Why have we gotten to this point of so much resignation that we need to have a two-speed system? Is that the future? What do you see the obstacles?
Well, first of all, can I just dispel some of the misery that you've just outlined in your summary? Europe is capable of great things, or it wouldn't exist today. Secondly, can I just say around the political headline of the Silicon Valley of regulation? Well, I was in Silicon Valley not that long ago, and they were very impressed by European regulation, including around crypto assets. So I think while I take some of the criticism of, and I think supervision more than regulation, don't dismiss the fact that Europe regulates and that others follow. I think on the big question of money, it's a very simple, straightforward reality that in 31 years of the single market, it doesn't exist for capital. And I think citizens are beginning to see that they're stuck in their own country when it comes to access to finance. And I think the fact that we need to spend so much on the transition and the public purse can help, but not do enough, we need to say clearly where we're going to get the money for this. I do agree that your report, I think, is really important in terms of putting before European governments what lies ahead. I deal with finance ministers, and sometimes I think that even within governments, ministers don't speak to each other. What we need to see now from the leaders, and next week they will meet, is clear, if you like, guidelines to their ministers as to what they can do. Not the limitations of what they can do, but the objective, which is to have free movement of capital, access to deep pools of liquidity, so that we can finance, as Nadia Calvino, the president of the EIB, said, we have great innovations in Europe, great startups. They just don't get the money to scale up. And I think that is the challenge. So I suppose in terms of where Europe is today, I'm outgoing. I can be a bit more free with what I say. For the incoming commission, the letters of mandate are very clear. We have not resiled from our targets around biodiversity and climate, but we've now put an edge of competitiveness into the equation. And I think what it is, and somebody mentioned the pendulum, it is swinging back to more pragmatism as to how we achieve our goals, perhaps less ideology, and bringing people with us. And I think in all of these conversations, the financial system is not there just for itself. It's for society. It's for families, it's for SMEs, it's for large companies. And it strikes me, and I would join in the condolences to the people of Spain. You know, when a big crisis happens like has happened in Valencia and this country, I mean, nobody's talking about the financial system, we're talking about helping people. And that should bring us back to what Europe essentially started and what it's about. It's a project to bring people together. We have achieved an enormous amount. Sometimes it takes a crisis to achieve it, hopefully not in this case. And we are about to start on the next wave. But it requires absolute political commitment from the leaders of Europe to allow their ministers down the line to agree on things like insolvency that's more European than national, because that's a barrier. And there are many barriers like that that we have to get over. I mean, I've been frustrated in my role when I hear political statements about, yes, we agree, banking union, capital markets union. Then when we talk about what needs to be done, people push back. And I think that's where we now need to say, look, this has to stop. We need to be very real and very clear about why these are important and bring people. But if we could get people behind this, the citizens behind this, I think this would also really help us in this project. And that's why the word savings matters. We're great savers in Europe, but I'm afraid the savings are not put to good use.
But that's the thing, right? In your report, you're even saying that a significant part of those savings are being invested in the US. And so when I look at Europe compared to the US, you know, there isn't a VC culture, right? Very hard to fund all those great innovations. There's no lack of innovators, lack of financing. There isn't a retail equity culture here. There's no 401ks, right? There's like 7 stock exchanges. So think about the fragmentation, whereas you have 2 there, you know, Nasdaq, New York Stock Exchange. So when you have all of this, how, and I think you're right. I think the Capital Markets Union, it was seen by, there's a bunch of high-level finance guys in suits and politicians getting together in an obscure room. At the end, it's about savings. Mm-hmm. It's about retirement, you know, funds. It is about healthcare. How do you bridge that gap?
But you know, you touched the point. The key point is the link with the normal life. Mm. What is happening in these very days in Spain is bringing us to think that Europe has to be linked to that. And I can tell you that I'm going around Europe to present the report, to discuss the report with experts and with people. Large audiences, citizens, can tell you that the example that shocks the most the people is the example of digital payments. When I say every debate I have, you know, we the Italians, we don't want to pay with a French digital payment system. The French, they don't want to pay with a German payment system. The Germans, they don't want to pay with a Spanish payment system. And we are all very happy to pay all with American payment systems. That is Europe. This is our problem. And I think we have to consider that this problem is a daily experience because we are all paying every day with 3. We have the choice among 3, all Americans. And it is clear that this topic is something that is not just a topic on fees. We know very well that the banks are protagonists. It's a problem of the power of the data. And data are going all there. And I think this is, in my view, something that is bringing awareness. I was a sort of priest of awareness in this period, trying to explain to the people that we think that we have a single market because we have the euro. But in reality, we don't. So my answer to the first question this morning, why we have a problem in Europe in terms of productivity, why we have a problem in comparison with the US, it is very simple, because in our slides, in our books, in our debates, we think that China is one, US is one, and Europe is one. And it is not. Because on energy, on telecom, on financial services, on defense industry, we are not one. We are 27. And if we are 27, we are too small in the world of today. So the key point is to consider that after the euro, we stopped the integration for political national reasons. And I would like maybe to use a little bit tough term, hard term, But we have to say, clearly to say, that economic national sovereignty is making happy Wall Street and the Chinese, not the national level, because we are losing jobs, we are losing growth, we are losing ahorros, we are losing, you know, the example of on the defense industry is incredible because of the fragmentation of our defense industries. In not 27, because we don't have 27, in 8, 9 defense industries, not cooperating among them because of the national flag. We are all so proud of the national flag. The consequence is that we spent 140 billion euros to help militarily Ukraine. But we needed to spend immediately, not with projects for 10 years. That is our specialty, if I may say. And so the key point was to buy immediately military furnitures. And 80% of these 140 billion euros was to buy American, Turkish, and South Korean military furniture. So we are very generous in jobs creation in Michigan, Pennsylvania, Anatolia, Seoul. And they are not with us, because 88% of what the Americans spent to help militarily Ukraine was to create jobs in the US. So I think this topic of the asymmetric integration of Europe is the main point. And this is also the reason to say it is not an external topic. We have not to find out of it is our hidden gem, and our own obstacles are today refraining us to growth. And we have to overcome these obstacles.
I think one of the reasons why now is the time is because of the conversations we've listened to about the geopolitical tensions. And I think Europe is less naive about itself today than we were even 5 years ago. I think COVID really sparked, you know, the reality that we were vulnerable on many levels in supply chains, and that was just COVID. When the war hit, we realized that we were reliant on an unreliable supplier of energy, and we have done a lot. So rather than us allow pessimism to prevail, we have it within ourselves to change the dial and change the dynamic. We have got the excellent reports before us, and we have a new commission coming in. And I think that the President von der Leyen is very clear about what she wants to see for the future of Europe, which is a stronger Europe, with strong relationships globally, but a Europe that actually takes account of what it needs to do to ramp up investments. As I said, we haven't changed our targets, but we haven't pinpointed where the money will come from to meet all of those targets. If we don't actually do that, I think we risk losing public support for these very ambitious transitions. And I think that would be very detrimental. But rather than us sit here just speculating about what the problems are, I think we need to realize that we have the dynamic and the capacity to do it. It's complicated. You have a Commission, a Council, and a European Parliament, and we heard about the Parliament. But we need to get buy-in to what are we trying to achieve. A stronger Europe, who's against that? No one. A Europe that invests wisely, including in defence, and gets value for money. Everyone is in favour of that. Food security, everyone is in favour of that. That requires a whole climate investment programme. So in a way, it's just to push a little bit harder and to stop allowing some governments, some member states, to say one thing and do another, or say one thing and do nothing, which is extremely frustrating. And I hope you can hear it in my voice, because we're nearly there. In terms of what we've done as a Commission, we've a lot of low-hanging fruits. A lot of the technical, structural things are done. Single access point, various other things like that, Listing Act. But now it's the big political project that needs to be pushed forward. So how do we convince member states that it isn't a question of if you win as a member state, I lose? How do we convince them it's a win-win? And that you don't need to have either a stock exchange or whatever in your country to make you part of a stronger financial system. We haven't had those conversations sufficiently. But they will start, and I hope they start before the end of this year, so that the incoming Commission really deals with this topic which is beyond just the finance minister's remit. And as somebody was saying to me, very often in the negotiations, you have the technical experts that go with what was the line of the past. And I think we need more politics actually now, much more politics around unlocking the single market for capital. One of the things that, and I think I said it to you in our first meeting, I get so frustrated when I hear the words cross-border. I mean, how and why do we use those terms in a single market that is the European Union? And actually words do matter, because if you think that way, you act that way. And it's not good for the investments that Europe needs. So I suppose in one sense, we could, ignore the reports to our peril. I think that would be really dangerous. And I think that's why there was great wisdom in having a report that's public, that you're talking to citizens across Europe, which really means that the politicians that lead need now to respond to that. And the word that they can't use is, no, we're not doing this, because they don't have another answer. And I'm hoping that will be the kickstart that Europe needs to move.
One of the areas where we can get the money is by increasing substantially securitizations. Right? And everyone that I've spoken to sort of agrees with it. And Anna gave this morning the following statistic, which is Europe is at 0.4% of GDP, US is at 4%. That spread is terrible. What's even worse is if you go back to pre-financial crisis, the number was the same. US went down, came back up, and Europe never recovered. And so are you optimistic that we're going to get there, and why?
Look, I think you mentioned the financial crisis, which wasn't mentioned up until this very point. And I think we need to look at the word trust. I think there's a problem of trust between member states, actually, in this topic generally, because of the financial crisis and the fact that the taxpayer had to be hauled in to pay for the problem. On securitization, I was asked this question at my hearing. And if you listen to the European Parliament, there are mixed views on securitization. And I think we need to explain why it's important and how it works and why it can help to increase the capital that's available for investment. But if we don't do the groundwork on this topic, we will again fail. So if you ask me if I'm optimistic if we put in the political effort to convince members of the European Parliament, but also convince leaders around Europe that this will help unlock capital. And we haven't done that yet. I mean, in my efforts, I've been trying to hear what are the complaints or the worries that people have. And it is about the legacy of the past. I mean, maybe America doesn't have as long a memory as Europeans have, but we tend to remember pain. And I think we have to accept that and understand it and see, can we address this one issue of securitization with saying, look, it won't be like the past because, and that's a conversation that's just about to start.
No, I think you're absolutely right. I think that if you look at how painful the financial crisis was in Europe vis-a-vis the US, it was a trauma, right? Despite the fact that it came from the US, the magnitude as a percent of GDP was much higher in Europe. And the US dealt with it much faster and moved on, whereas here it was much bigger and it took far more, so there is still that trauma recovery. Which brings me to the difference in regulation and supervision between the two blocks, or the one country and the bloc, which is in the US, the regulatory systems and the supervisory system, it is to supervise, regulate, but ensure the competitiveness of the American banks and other sectors. Here, it is to regulate without the second consequence of competitiveness. How do you breach the gap? Well, you're disagreeing with your body language, so.
Only slightly. I mean, I have a very long title, and one of them is financial stability.
Yeah.
And, any sector that doesn't have regulation will have a problem of instability. We had problems in the food supply chain in the past, and we regulated very effectively. So I don't accept US great, EU not. I don't accept that. Where I think there might be an argument, and we've had this conversation with your colleagues here, is on the supervisory side. I get the impression that between the legislation and the supervision, there appears to be maybe added layers. But I would also challenge the financial sector itself to show exactly where, because I've been 20 years in the European system, 16 years in the Parliament, and now in the Commission. And we've been talking about red tape since I joined, and I wrote about it for 24 years before that. But unless you are much sharper at identifying where it's causing a problem. Now, it might be a problem to you, but it could be a savior for us. So we don't always agree. I mean, you're likely to want less supervision than I might want because I have some financial stability in my title. But I think we can agree if there's overlaps in various regulations, can we do something about that? And we are doing something about that already. So I think that process is underway and it will intensify. I mean, my colleague Valdis Dombrovskis is charged with this very topic of looking at excessive rules and regulations, but not getting rid of them. I mean, way back, I chaired a committee of inquiry into where we deregulated, and it wasn't pretty. So I think that we need to be a little bit more balanced about this than saying it's European bureaucracy is the problem. We certainly have some problems that we need to solve, but I would not like us to even use the word deregulation. It leaves a very bad taste in my mouth.
Enrico, your take.
First of all, in the report, I put securitization as one of the topics. So I strongly believe that we have to eliminate this risk aversion atmosphere, mood that we have here in Europe. And it's a general mission, and I think securitization is part of that. Second, I don't want to leave this debate without answering Anna Botin's question of this morning. And the topic is not just to say, in general, we are against red tape or we are for simplification. The topic is, what does it mean concretely? And I put two topics in my report that are, in my view, large part of the problem. Because the problem is, yes, the fact that we had a lot of regulation on the Green Deal in the last 5 years. We have the multiplication of the level of regulation on the banking system because of EBA and SSM, and you know very well. But the key points for me are, first, the fact that in the last years, we didn't have, I would say, too much pressure on member states to avoid the implementation of directives in a too national way. So my point in the report is very clear. We have to stop directives and we have to use regulations. This is, for me, simple, very simple, but if we don't agree on that, all the discourses about simplifications are very, very empty. So this is the first point. Second point is about the fact that we live in a single market, but we have 27 corporate laws, 27 fiscal systems. It's a crazy, it's a mess, Europe. So my point, I put a proposal in the report that is the idea to use this method of the 28th virtual state. I know it is complicated, but the idea is to not to cancel the 27 corporate laws, because I know very well it's impossible for, I would say, historic reasons, but to give an option to companies, to say we create a 28th virtual state with its own corporate law, and you can choose this one. This one can be valid everywhere in Europe. And this is the way to eliminate the multiplication of levels. It's a strong push in favor of simplification. I know here, Cuerpo was discussing about the idea to apply it as 18 Comunidad Autónoma Virtual. But I think in general, we live in a mess of, I heard yesterday, I was in Germany, and they told me that in Germany they have 18 regulations on data protection, 16 for the lender and 2 for Bavaria. So and it's, this fragmentation is the main obstacle. We have to be more simple, more united. Is the only way to attract investments.
So we have 38 seconds. Question is, 35 now. There was a 0 chance this morning of banking union happening. So does it happen in the next 5 years, yes or no, and why now, if the answer is yes?
It moves forward, but whether it's complete, that's for the next commission to deal with. We know where the opposition lies, but we know that there is a push, and the European Parliament has been helpful. Some of the way member states have intervened has been unhelpful. So again, it goes back to why are member states so protective of something which actually traps them in less, rather than moving towards what the letter report has?
My answer is 80% yes, and if Trump wins, 100% yes.
So there is the
nice
bid-ask spread from 0 this morning.
cool.
We're moving closer to 80.
To 100%.
Enrico, Maria, this has been a terrific panel. Thank you for being with us.
Thank you.